So as you guys know, Cathie Wood is a very popular but also somewhat controversial stock market investor, mostly because of her sticking to riskier, kind of disruptive tech stocks that can sometimes be quite volatile. Sometimes they're down a lot, but they also have a lot of future potential if they're able to actually deliver on whatever it is that they promise that they can do. Anyway, Cathie started the investment firm ARK Invest, which buys up a ton of these stocks and then packages them together in various ETFs. And unlike other investment firms where we have to wait for quarterly filings just to see what they're up to, well, Cathie actually releases all of her trades as soon as they happen. So it's pretty cool. We can actually see what she's up to all the time. And so in today's video, we're going to run through the 5 largest, most recent stock purchases that Cathie Wood made over the past month. So these are very recent trades. So it's going to be a ton of fun. I'll give you my own opinion on each one. In typical All Is World fashion, I'll even rank them from best to worst too, just to make it a little more fun and interesting as well. So it's going to be a ton of fun. Can't wait to share all these with you guys. Please hit that like button, subscribe if you haven't already. Really helps the channel out a lot. If you want to go above and beyond to keep my channel alive and really support me, you can also head over to Patreon or hit the YouTube join button and get some cool perks in return too. But thank you for any support at all, even just hitting that like button, subscribing. It means a lot to me. Thank you for stopping by. Let's go ahead and just jump straight into this. 5 stocks here that Cathie Wood is actively buying right now. All right, now we'll be counting up here from smallest to largest purchase. And coming in at number 1, the smallest of the bunch, that's going to be PagerDuty, ticker symbol PD, which Cathie purchased over 370,000 shares of this past month, which at today's price is somewhere close to $7.5 million. So even the smallest purchase here was quite large. Now, if you've never heard of this company, they're essentially a cloud-based incident response platform that helps other businesses reduce their website downtime whenever they run into any issues. For example, their on-call and incident response management tools help monitor online operations 24/7 and make it easier for employees to report any issues to the appropriate IT departments as soon as they happen, so that they can immediately get to work on the issues and reduce any website downtime, which PD advertises as a 74% reduction on average. And more recently, they've also been heavily integrating artificial intelligence into the platform to improve efficiencies even further, including, by the way, the use of generative AI, which has obviously been all the rage lately. Anyway, the services they provide are obviously needed by most medium to large size companies around the world, and that's led to a lot of growth and success for them, reaching a whopping more than 25,000 different customers, if you can believe it, including some huge names like Netflix, Nvidia, Zoom, Chipotle, and more. As a result, sales have soared over the years and even carried some decent growth throughout the pandemic of around 30% or more. However, since then, that growth has really slowed down to just around 15% going forward. Now, obviously, that's partly because of the weak economy and the tough comparison to the prior years of growth. But at PD's relatively small size, it's still a little worrisome to see that slowdown there, especially given that the company is not yet profitable and has actually seen declining net income every year, which is definitely not what you want to see in a rising interest rate environment where borrowing money is going to be even more expensive. As a result, though, the stock, which only recently IPO'd in 2019, has gone through a large crash of around 65%, which I admit does make it more interesting at these lower levels. But even here, the valuation is still a little rich at a price to sales ratio above 4.6. Given the smaller revenue growth that they're experiencing right now, I think that valuation is just a bit too high for a still unprofitable spec stock. So I think there's better options out there, and I'm going to rank this one a little low here at number 4 until I see what else is on this list. Moving on to stock number 2, though, we actually have a very interesting biotech that I've never owned myself, but I have often thought about picking some up, and that is CRISPR Therapeutics, ticker symbol CRSP, which Cathie has been investing in for years and recently increased her position this past month by more than $12 million more. Now, if you've never heard of this one, I mean, it's right in the name. This is a company that is fully dedicated to the development and future potential of gene editing, which, if you know anything about Cathie Wood, you know that that's an area that she very strongly believes in for being the future of medicine. And this company is a specialist really at using the CRISPR-Cas9 method to cut and edit DNA in order to cure or treat all kinds of various diseases, even including hereditary, autoimmune, and cancer types. And it can even be done inside the body, what we refer to as in vivo treatment, or outside the body, and what is known as ex vivo. It's a very disruptive and revolutionary technology, but the majority of it is still in early stage development or trials. Thus, more people consider investments into any of these kind of gene editing stocks to be quite risky and speculative. Not risky enough for Cathie Wood though, as she's made CRISPR the 6th largest holding in her Genomic Revolution ETF that focuses on many of these technologies. Now, CRISPR is specifically targeting treatments for blood disorders, cancer, regenerative medicine, with the use of stem cells being edited, and other in vivo applications. And when you look at their robust pipeline of treatments, you'll find several programs that continue to show progress in each one of those areas, with a couple in blood already reaching clinical trials, several in cancer, and a couple more in regenerative. Unfortunately, there's none in vivo quite yet, but the two top ones are getting closer. As you may have noticed though, literally none of these treatments have been FDA approved for commercial use yet, and as a result, CRISPR's financials are likely not going to impress you very much. They do sometimes generate meaningful cash thanks to partnerships and fundings, but most years see almost no sales with substantial losses to go along with it. And as such, the stock price can be just as volatile, even rising above $220 per share at one point during the pandemic rally, before crashing by over 80% to where they trade today. Given the crash though, the market cap has sunk to around $3 billion, which I do think at these levels it would likely experience a big pop if even just one of their breakout treatments were to get approved. But until then, you'd be risking your money on a volatile spec play based on what they could potentially do in the future. I gotta say though, I still like it more than PagerDuty just because of that large potential. So I'm gonna go ahead and rank them higher at number 3. As for me, not buying this stock quite yet, but it keeps creeping up higher and higher on my watch list the more that it falls. And I think there's going to be a lot of promise here in gene editing technologies, so it's one to watch for sure. Moving on to stock number 3 though, we actually have a stock that I own myself too, so I'm kind of happy to see it make the list here, but that is none other than the AI data management and analysis company Palantir Technologies, ticker symbol PLTR, which Cathie purchased over $17 million of. And you guys should probably know this one by now, as I've often talked about it on my channel and talked about their future potential too, and how effective they are in really helping both the public and private sectors run more efficiently and effectively through their services. In the case of the former, their Gotham platform helps the government with anything from disease monitoring to public safety planning to strategic military action and much more. I mean, it's gotten to the point where I feel like anytime I search Palantir on the internet, I'm greeted with another news story of how Palantir secured yet another brand new contract with the military worth hundreds of millions of dollars. This one was just from last month, for example, and it's worth a whopping $250 million for helping the US Defense Department in advancing their artificial intelligence research. Over time, I think Palantir will become so entrenched into the government that they simply won't be able to avoid doing business without them. But of course, there's also the commercial or private sector too, where their Foundry platform helps many companies improve their business as well, whether it's helping them run their factories more efficiently or helping a biotech giant like Novartis discover more breakout treatments in their R&D department. The list here is also just as large in terms of what they can assist with. For example, Panasonic claims that in just a month of working with Palantir, they were able to reduce processes that used to take 4 hours to complete all the way down to just 15 minutes. How crazy is that? And most recently, Palantir added another platform specifically dedicated to AI large language models like the one used in ChatGPT or Google Bard. And it can not only be used by customers independently, but it's also integrated into Palantir's already existing platforms too, to make them even more effective. In all, it's been a winning combination for Palantir that even in the face of the horrible macroeconomy that we've been in this past year, Palantir was still able to grow their billings by over 50% last quarter, while also increasing their customer counts by almost 40% on a trailing 12-month basis as well. And while the stock has always been considered speculative and high risk because of their heavy losses, they actually managed to turn a GAAP profit in each of the first 2 quarters this year. We'll see if that momentum holds up when they report third quarter results soon. But for now, the stock has had a breakout year, rising almost 160% year to date. And I have to admit that the more that it climbs, the less attractive it gets, as it now yields a very rich PE ratio above 60 and a PS above 17. However, I think that's missing the point that they just recently started to turn a profit, so you need to give them more time to ramp up before grading it too harshly. Case in point, their more forward-looking PEG ratio is actually much better at just slightly above 1. I think that's pretty reasonable for what you get, and that's a robust AI-based company with tremendous future potential, and it's one that I'm hoping to own myself all the way to retirement. So I'm going to rank them pretty high for now at number 2 until I see what else is on this list. It's risky, but it's a stock that I like. That will, however, leave us now, though, with the final 2 stocks of the list. And coming in at number 4, we actually have a stock that I don't think I've ever covered before on the channel, but that is Archer Aviation, ticker symbol ACHR, which Cathie purchased a whopping close to $20 million of just in the past month alone. Now, you guys know how much Cathie loves her Tesla stock, right? Well, Archer is sort of another version of an electric vehicle, except there's flies in the sky rather than driving on the road. And they're also primarily marketed towards being a flying taxi business rather than something like a mass market consumer vehicle. As you would expect, though, this means that Archer has no real commercial presence quite yet. In the meantime, though, while we wait for the flying taxi market to actually grow or become a real thing, well, Archer is focusing their business on airline and military contracts to subsidize their business as an OEM. For example, United Airlines has already purchased 100 of their aircraft for travel between New York City and the Newark airport in under 10 minutes, while the United States Air Force has also expressed interest in their flying vehicles as quieter, safer, and even cheaper alternatives to their traditional helicopters, already awarding them with a contract worth up to $142 million based on certain criteria. Assuming that Archer is able to actually deliver on what they promised, though, the company could quickly experience rising growth in the coming years. But as it stands, revenue is still virtually non-existent, with each of the past 2 years recording 0 in sales and over $300 million in losses, respectively. Again, in such a high interest rate environment, that's a hard pill to swallow. As such, though, even after rising by close to 170% this year, thanks to those new contracts being awarded, Archer stock is still down a whopping 73% from their all-time high. Does that make this a great time to buy, though? Well, to be honest, there's just not enough information available to even really give an opinion on that. Because if we scroll over to Yahoo Finance, analysts are still not expecting any sales to come in until next year, which they estimate to be around $1 million. And even then, if we put that into our calculations, given the $1.4 billion market cap, it would still leave the stock trading for a 2024 price to sales ratio north of 1.4 thousand. Now, obviously that valuation could drop extremely fast once they start scaling up, and this very well could be the next great travel method of the future, as it eliminates traffic and can save people a lot of time. I mean, not to bring up something tragic from the past, but I do remember that Kobe Bryant, for example, used to frequently fly in a helicopter just to avoid all the California traffic before he tragically passed away from a crash. And maybe these autonomous electric vehicles will be even safer alternatives too, because of how advanced they are. But that's a future that I still think is quite a bit of a long ways away from reaching the mass market. So for now, I'm gonna have to rank it in last place at number 5. It's not anything personal. I really do think they have some distant future potential, but I just think right now it's too hard of a stock to analyze, so I can't touch it. And finally, guys, this is going to leave us now with our fifth and final stock, the biggest purchase of the past month. And you know what? This is actually a biotech that I owned very briefly a long time ago myself too. It kind of popped a big amount right after I bought it, so I ended up selling for a quick profit, and I haven't really talked about the stock ever since. But that is Intellia Therapeutics, ticker symbol NTLA, which Cathie has been investing in for years, I believe since 2016, and over the past month she added another $26+ million worth to her funds. Now, just like CRISPR, this is of course another play on the future of gene editing and also creating in vivo and ex vivo treatments. Now, while all these companies are in the early stages of their journey, though, it could be argued that Intellia is ahead of many of their rivals, at least when it comes to their NTLA 2001 program, as that is the very first in vivo CRISPR gene editing therapy to get clearance for late-stage clinical trials by the FDA, the first one. And there's many more programs in their pipeline too that you can read all about through their website by clicking on them. The one we just mentioned, for example, treats a rare genetic disease that can lead to heart failure, with an estimated 50,000 people born with it and another 200 to 500,000 that developed a different form of it. The disease has a low life expectancy of only 2 to 15 years after symptoms occur. So if the treatment proves to be successful, it would be an absolute lifesaver for hundreds of thousands of people, not to mention a breakout star for Intellia. As awesome as that might be, though, the fact is that it is still another high-risk spec play here in terms of the stock that generates very small revenues with growing losses. And that's made for a very expensive valuation with a market cap above 2.3 billion, no PE available, and a price to sales ratio above 41, which generally speaking, a PS of around 1 or less is considered good, but 41 is way higher. Now, you could say for growth stocks, you can definitely go higher than just 1, but higher than 40, that's going to be pushing it. With that said, though, the stock price itself has actually traded much higher in the past, even breaking north of $200 a share during the height of the pandemic rally, but today it only trades for $27 after crashing close to 90%. I admit it is getting tempting to jump back into the stock at these really lower levels, but it still remains too risky for me personally at this time. I'll continue to watch it though, and you know what? I'm actually going to give them a very slight edge over CRISPR in the ranking, just for that recent FDA approval of late-stage trials, and I'll bump Palantir up one spot to fit it in, which is going to give us our final results now, where I put Palantir at number 1. They're easily my favorite of the list. I put Illumina at number 2 for the reasons I just mentioned, the recent FDA approval. CRISPR follows very closely behind at number 3. Some would argue it's better, but it's right there. PagerDuty comes in at number 4, attractive business, but not, profitable, and it's a concern. And then I put Archer at number 5 for being just too young and too risky at this stage. But there you have it, guys. In conclusion, typical buying spree here that we would expect from Cathie Wood. Risky stocks, but certainly exciting companies with future potential. I always kind of feel like if I'm getting bored in the market and I just want to, dip my toes into some kind of crazy speculative stock, I can head over to Cathie Wood's website and find tons of them that she's buying, and some of them are pretty interesting. So I appreciate Cathie Wood. I like that she's out there. I like that she gives us ideas and stuff that we can look at. But in terms of actual investment, only Palantir on this list will be getting my money as of right now. But maybe I'll dip my toes into some gene editing stocks in the future. Maybe I'll head back into Illumina at some point, but we'll see. Right now, just Palantir from this list. But what do you guys think? Do you own any of these? Are you thinking about buying any of these? I'd love to hear your thoughts down below. Thanks again for stopping by, my friends. Thank you for all your support. I will catch you in the next one. Hope you're all doing well. Take care. Bye-bye.